Hello guys, welcome to the trading Parrot. Bitcoin is sitting at 28.5. On Wednesday, we're going to have the FOMC meeting. Price is pretty much going sideways. We have to know what's going to be the bias for this market and how we approach that meeting. The amount of leverage is skyrocketing right now. Positions are getting ready for a massive squeeze to one side. Today, we're going to be looking at the liquidity, fair value gaps, a potential head and shoulders forming for Bitcoin. We're going to look into the target of that. Let's also have a look at the healthiness. Some things are worrying me. CME gaps, very important levels to watch out next week. What sort of volatility we are looking for this week? What is the current bias between longs and shorts? And a lot more that we're going to be looking. And whatever you do, make sure you don't miss the analysis of the monthly CPR. This is a new month. You cannot miss the levels to watch out. And at the end of the video, I'm going to tell you what happened with Cerberus. Cerberus has had an incredible performance to forecast in which direction the market is going. So do not miss this full video. Pretty much we started the month of May in the red. We can see a few more tokens outperforming Bitcoin in the past 90 days compared to the previous week, which means that the altcoin season index has climbed 2 points upwards. The Fear and Greed index is positioned in grid 63, and the full market of alts seems taken over by Pepe. And if you've been for enough in this market, whenever I see that there is a single winner and that winner is as crap as Pepe, that usually is not a good sign. Even in Lunar Crash, we are seeing Pepe at the alt rank number 1. I mean, correct me if I'm wrong, maybe it's a fantastic project, but I'm definitely biased by the name and the icon. Big movers for today, we also have Courtesy and OAX. Tron is doing pretty good. And we have Binance Coin at the top 2. Let's have a look at the liquidity and the areas of interest. In the past 3 months, we can see that there's a big accumulation still at 25.4. It hasn't been taken. We keep repeating this every week, but 22.4 to 22.6 is still there. You will be hearing in social media, and myself included, that 31 is still at level that we could be hitting pretty soon. And the reason is because 31K is the first level to the upside that has substantial liquidity accumulated. The next one is 33.4. If we look at the more immediate liquidity, we have the 1 month accumulation, and we can see that 26.4 has substantial liquidity, and all the way from 30 to 31.6, there's also a big cloud of liquidity as well. In terms of fair value gaps, nothing really has changed. We are still within this area here, and we haven't got to 32.6 to claim that area, neither to the 26.5 and below. In terms of CME gaps, we created one at 28.7, which we claim almost immediately, and the larger CME gaps at the top and at the bottom are still unclaimed. This is the first pattern that is worrying me. If the price comes down and visits 27.7 and fails to hold the support, it could break down here to the downside. The target is the high of the head of the pattern, which I copy, and it's pointing to 24.1. For that, obviously, it needs to complete the pattern and break down below this line of support. Let's look at how healthy right now is the Bitcoin network. Since around July, we've been monitoring the number of unique addresses that appear for the first time in a transaction of the native coin in the network. And this is a very long description just to say that there is interest in the network and people are using the Bitcoin network for transactions. Whenever we see this indicator crossing its own long-term MA, we usually see that as a sign that the bulls are back and we are due for at least a decent rally. And the signal didn't disappoint us. In end of October, I published a video saying that we were breaking above the MA that was telling us that we were going to have some decent rally to the upside, which is exactly what we had since October. Right now, what I'm seeing is that it's cooling down. Maybe it's just a healthy pullback of the activity in the network. It might still end up doing a higher high to the upside. But right now, I'm starting to monitor this more often just because it's been quite a few days that we are going just down and down. If you look at this area here at the beginning of the bull market in 2019, we have a big significant pullback into COVID, which was almost 60%. And that started with the activity of the network coming down for the first time. So this is definitely something that we want to keep our eyes very close. I'll keep you updated. If you subscribe the channel right now, hit the like and leave a comment if this is the information that you find more useful to make your trades. In terms of levels, we talked about these levels last week, and we were expecting to see a breakout either to the upside or the downside right here, just because this was such a significant level. And we have to say that we have just lost the level of 29.2. Usually when you lose a level like this, there is a likelihood that we come back and revisit it as a resistance. So we could still come back and revisit 29 before heading back down to the next level. Or if there are very good news in the FOMC meeting, this might end up being a fake out and then we still go to the upside. Remember that at 31K there is liquidity and that acts as a magnet. And speaking about the FOMC, that's going to be happening on Wednesday. We also have this week the PMI. Both of these events are pretty important in terms of how they can affect the markets, not just crypto, but all markets. A few hours ago, we were getting almost to 90% chances that we were going to experience a hike of 25 basis points. Right now, it has dropped just a tiny bit. Now we are 86.9, leaving the no change scenario at 13.1%. In terms of volatility, you can see how often we get big moves of volatility on the daily. This indicator here is the Bollinger Band width, and it feels like we should be getting a big spike in volatility anytime soon. I'm expecting to see it anytime from May to June. Now, in terms of the bias of the market, I have two pieces of information that you have to keep at hand. The ratio of longs and short is coming down, which means that there are many more shorts entering right now. There seems to be a bias that we're gonna dump heavy. You can see that from March until now, the ratio of longs to shorts has decreased 70%. By the day, we are increasing the amount of shorts. And when you get too many of the same side, what do you get? You get a squeeze. It could become a short squeeze. If we look at the delta in high block capital, we can see that we have transitioned from being a period of bias towards being long, and now we're starting to see some red around here. It's not very significant, to be honest. Short squeezes are more likely to happen when we have 10 billion, 20 billion, or even 40 billion in red. Right now, we barely have 1 billion. But it's very important that we keep an eye before Wednesday. If we see on Wednesday that this thing has accumulated 20 billion or even higher, we might be due for a short squeeze. Martin, in his Twitter account, is pointing out that in the past 12 hours, the price has been going sideways, and at the same time, the open interest is increasing and increasing and increasing. What that means is like we are preparing a pressure cooking pan with positions longs and shorts, and the price cannot move because there's a lot of tension between these two sides, and literally the price is just trapped. But all that needs that pressure pan to explode in your face is a small bias, like for example on Wednesday that they gave unexpectedly very good news, then suddenly a big portions of the shorts, they close the position and the pressure pan explodes like crazy. And that's when you see that the remaining positions that are short, they get all liquidated. The open interest has increased from 8 billion to almost 8.5. So that's 500 million in open interest of new positions that were open in the last 12 hours. That's crazy. Since the past week, I've been pretty bearish on this 4-hour move on the RSI. I've been publishing every single update almost twice a day on what's going on with this move, and the price ended up doing precisely what we were expecting. We gave two scenarios. The scenario number one was that we were going to just go with the RSI straight down, and the scenario two was that we were going to retest the trend line and then come down. The scenario number two was the one that actually played out, and that's a move of $2,000 that it's still damping even further. It still looks pretty bearish. It doesn't look like it's stopping. If you do not want to miss out again on another call like this, make sure that you're following me on Twitter. Trading Parrot is my handle. If I have time, I will publish a short with more details on YouTube, but all the time-sensitive alerts are going to come first to Twitter. Now, if we focus on the one-day RSI, we are also seeing something very interesting. We are in this downwards structure in the RSI, making lower lows and lower highs. We got just rejected by this line, and thanks to that, now I know where I should be placing my trend line. And the next thing I'm gonna be doing, add an alert when we cross the trend line once per bar. I definitely want to be notified first, and I'm gonna send myself an email. As soon as I get that alert, I will be letting you know on Twitter. That's extremely important because it means that we are still in a structure coming down like this one around here, and we might do now a lower low and then retest. And the question is, at which retest are we going to come back above? Why is that important? Because the price follows what the RSI is giving us an early indication. Seeing this pattern on the daily is giving me a bearish bias. But on the other hand, we have the FOMC meeting, and any substantial positive news may change things completely the other way around. Let me know in the comments if you want to learn my method of RSI breakout. So what we're seeing here is the net unrealized profit and loss. The blue areas are the areas with the less risk to enter the market. The hotter the color gets, the worse entry you're making. And this is just purely based on the historical data. It cannot guarantee the future performance, but statistically speaking, if you want the best entry that you can get, usually you look up for entering in the blue zone or in the green zone. And right now we are entering yellow zone. So that is a warning area. It's still not too overpriced or anything. It can still climb to the orange area. Definitely never ever buy in the red zone. Personally, I prefer to accumulate up until the green area. If you haven't bought up until the green area, I rather not buying and waiting. Guys, if you've been missing out in my website, there's a lot of information about indicators, strategies, bots, signals, and many tools. You can join TTP by actually just joining with a subscription paid monthly, or you can join for free using the links in the description. The second link is going to give you all the instructions on how to sign up for OKX and then trade with volume on OKX, and then just with that, you can claim your subscription for free. Remember, have a look at all the links in the description. Plenty of offers and good deals there. Okay, let's have a look at something very important for the month of May, which is the CPR monthly level. We can see that the levels have been printed now in the chart. We have 3 resistances and 3 support levels. We clearly say during the whole month of April that if we don't reach the first resistance in April, it's very likely that we're going to break below the pivots in May, and precisely the first day of May, we are below the pivots. That is exactly what happened on the very first day. What Bitcoin needs to do right now is to claim the 29.2 level and hold it as support. There cannot be any bullish move in May or in June if we don't claim back that level. For example, here in March, we were coming back below the pivots. We visit the first and the second support, and then we claim all the levels all the way to the third level of resistance. That was a very bullish move. And we kind of have to do something very similar. We can come back down, touch the 27.1, the 25, or even the 23, but we must claim back the pivot levels in white right there. If we go to 31 and at least we kiss the first green level, that will be an amazing picture for the coming months. BTC dominance on the weekly is right now above the resistance of the multi-year. That is huge news for a Bitcoin season. We are sitting at 48.3 and we closed the monthly above that level, and we're now coming back down potentially to retest that as a support. Servers uses a weekly chart, and yesterday we did close the sell signal. Let's have a look at what happened after sell signals in the previous times that the signal triggered. We have one sell around here. We got another one at the very bottom of the market. We got one that had a huge performance. Also this one at the beginning of the bear market. We have one right here at the bottom. And we got a final one here that kind of hinted that this was gonna come back down. What do I do with this sell signal? Is this a signal to go and sell everything? Definitely not. As you can see by the performance, the sell signal is not what I use to action things. I normally use the golden signal to decide to unload some of the assets and the most risky bots. I use the sell as a hint for me to get ready for deployment of more risk on assets. But when do I do that normally? First, I wait for a warning buy, and I look up for the opportunities when I see that servers is fully reset. If you want to get notified when that is going to be happening, obviously, if you see the price coming down, that's going to print a warning buy and eventually an actual buy signal. I intend to make my decision to enter with the most risky moves in between these two signals. All right, guys, I hope you enjoy all this content for you that I prepare. If you did, do not forget to leave a comment. That's definitely the one thing that's going to help this channel. But of course, subscribe to the channel and hit the like. And I'll see you in the next one. Take care. Bye-bye.